Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the confusing world of corporate finance. And that is a good thing because today we're looking at a report that shows a company is facing a bit of a tight spot, but might have a clever way out of it if you appreciate getting straight insights from corporate documents. Make sure you're subscribed. We also have a Discord community linked in the description below. Alright, let's dive into this. We were looking at a Form 8K filing from Katapult Holdings Incorporated, which basically means something important happened that the company has to report right away, kind of like a breaking news alert for investors. The big news here happened on the 29th of September of 2025, and it is all about a loan agreement that is causing some serious headaches for Katapult. Now, Katapult is a company that deals in common stock and redeemable warrants, which are basically different ways people can invest in or own a piece of the company. The ticker for their common stock is KPLT, and for the warrants it is KPLTW, both trading on the Nasdaq stock market, LLC. The core of this report is about a new agreement, a so-called second limited waiver, to their existing loan and security agreement. This might sound a bit dry, but what it means is the company missed a payment, or failed to meet a financial target in their loan agreement. They were supposed to maintain a certain level of originations over 3 months, and as of the end of August 2025 they didn't hit that target. This was actually a temporary issue that had been waived before, but now it is back. So what this second limited waiver does is it gives them a little more breathing room. It pushes back the deadline for fixing this problem until the 13th of October 2025. But here is the kicker: even though they got this waiver, the original problem, the existing default, is still considered to have happened, and it is continuing for a very specific reason. It affects something called conversion rights. This means the holders of the term loan, the Class B lenders, can now convert basically all the money they've lent to the company into stock shares of Katapult. This is like the lenders saying you can't pay us back, so we're taking ownership. Instead, this is a really big deal because it dilutes the ownership for existing shareholders. And how do they figure out how many shares they get? Well, it is based on the average stock price over the last 20 trading days before they convert, but they might get a discount. Right now, that average price is around $19.52, so depending on that conversion rate and any discounts, the lenders could end up owning a significant chunk of Katapult. Now, for the documents themselves, Exhibit 10.1 is the actual limited waiver agreement, and Exhibit 104 is the interactive data file that makes all of this searchable for the sexy. And finally, the report is signed off by Orlando Zayas, the Chief Executive Officer of Katapult Holdings, Incorporated, on the 29th of September 2025. So what does this all mean for Katapult Holdings Incorporated? Well, they in a precarious position. They missed a loan covenant, meaning they failed to meet the terms of their loan agreement while they secured a temporary waiver. This doesn't erase the underlying issue, the failure to generate enough business activity. The real danger here is the conversion of debt into equity. This means the lenders who are owed money could become major shareholders. This dilutes the value for existing investors. As more shares come into play, essentially spreading the ownership pie thinner, the company's ability to generate revenue and hit its targets is clearly under pressure. The fact that they needed a second waiver suggests that the financial performance hasn't improved as hoped. The short term fix until the 13th of October is just a pause, not a solution. Looking ahead, Katapult needs to significantly boost at its originations to avoid further defaults and potential takeover by its lenders. If they can turn things around quickly, the dilution risk is very real and could severely impact the stock price and shareholder value. This is a classic example of a company struggling with its debt obligations and facing the harsh reality of what happens when those covenants are breached. Alright, that is our breakdown of Katapult Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.